Welcome you all. Today I am going to teach you all accounting systems, or we call it bookkeeping systems. There are two accounting or bookkeeping system, right? The first one is integrated accounting systems. The second one, non-integrated accounting system. So integrated accounting system means, so you're having one account set for one set of accounts or the books, one set of accounts or the books for both cost accounts and financial accounting. Now see the difference here clearly. First understand the difference between these two. What is integrated, the other one is what is non-integrated. So integrated method, we say you are having one set of accounts, one one general ledger for the both financial accounting and the cost accounting. In this case, you do not have a two ledgers. In this case, you don't have a two ledgers. So since you are having one set of ledger, one set of books for the both financial accounting and the cost accounting, you can generate only a one trial balance. Since you are having one trial balance, only the one profit will be calculated. If you see the non-integrated accounting system, you are having two sets of accounting. One for the cost accounting, you are having two sets of GL, general ledger, cost accounting. The other one is financial accounting, right? So here you can see one set of ledger accounts, and so we can extract a one trial balance and the profit figure will be one. But here you are having separate set of books for the cost accounting, then the separate sets of the books for the financial accounting. Since you are having two ledgers, then you can generate two trial balances. See, from here you can generate a one trial balance from the cost accounting. Then the financial accounting, you can generate another trial balance, right? Because these two sets of the books we are having, two sets of the ledgers we are having. So two sets of the books, two sets of the ledgers we are having mean, so you can generate two trial balances. Since you can generate two trial balances, you can calculate two profits. One for the profit as per cost account, for this. Then here profit as per financial accounting, right? Since you're having two ledgers, you can generate two profit figures, right? So here I'm going to teach you all one of the question that was tested in 2023 July in AAT 2 paper. 2023 July AAT 2 question number 5A. I'm going to teach you all about this question. We'll read it first carefully. Nuan Private Limited uses non-integrated accounting system. See, they are saying the business is using non-integrated accounting system. Non-integrated accounting system mean, as I said earlier, they're having two sets of the books, two sets of the ledgers. For the cost accounting, they're having separate ledger. Then for the financial accounting, they're having separate ledger. Since they are having two ledgers, there will be two profit calculation. Since there are two profit calculation, then the examiner's question is, ask them you to reconcile the profit among these two ledgers. Now we'll read it carefully. Nuan Private Limited uses non-integrated accounting system. The profit shown in the cost accounting for the year ended 31st March 2023 was 450. Here they say the profit shown in the cost accounting is 450,000. Here the profit is 450, while the profit as per financial accounting was 490. As per the financial accounting, the profit is 409. Now see, when you are calculating the cost profit, you will use separate basis, separate principles, right? Here when you are calculating the financial profit, you will use accounting standard, separate basis, then separate principles. Since these two are two separate bases, these profits will not be the same. The question in the exam is, then they will ask you to do a profit reconciliation. We'll read the rest. Reasons for the difference are as follows. There is a difference in stock valuation, opening and the closing. Then they have given other 4 additional adjustments. Then they are asking you to prepare a profit reconciliation statement between financial accounting and the cost accounting. So shall we do? Right, we'll draw the table. Right, we'll draw the table format first. So this is the table format to give the answer. Reconciliation of the profits. Profit will say profit reconciliation statement. Profit reconciliation statement for the year ended, right, for the year ended 31st March 2023. 31st March 2023. I will start with the profit as per cost account. We'll take the answer given here. Profit as per the cost account is 450,000. When you do the reconciliation, that means the adjustments, you should receive the answer profit as per financial accounting. Profit as per financial accounting. So this should be the answer finally. So answer should be 409,000. I am doing this in 1000, so RS in 1000. So the last time 2024 January, there is no such a question. Mostly I will guess this time there will be a question from this area. Right, we'll first see the what is this stock valuation. So if you see, opening stock is having 47,500 as per the cost accounting. Then the financial accounting, they're having 52,500. Right, these two are different. These two are different. So opening stock high in financial accounting. You know that opening stock and the profit is having which relationship? Right. Right. So we'll start. So if you see the difference between opening stock and the profit, I will explain like this. Right. So this is the cost of this is the sales figure. This is the sales figure. This is very important for you all. Minus the cost of sales. How do you get the cost of sale? Opening stock plus the purchases. Add these two minus the closing stocks. Closing stocks. When you deduct the closing stock, you get the cost of sale. Then you get the gross profit. GP. This is our normal format for the profit calculation. Then finally you receive the NP, net profit, after deducting all the expenses. Now see, when you are having a higher cost of higher opening stock, when you're having a higher opening stock, mean this is high. This is high mean the total is high. Total is high mean the high cost of sales. Now you see, take the carefully. Higher opening stock mean high cost of sale. If you're having a high cost of sale, mean that your gross profit is low. Gross profit is low mean you're having a net profit is very low. Now if you see, opening stock and the gross profit and the net profit have a negative relationship. Negative relationship. When opening stock is increasing, the gross profit will come down. Now see, if you in this question, financial accounting are having higher opening stock compared to the cost account. Financial accounting are having higher opening stock mean they're having low profits. Now see, higher opening stock mean low gross profit. Low gross profit mean low cost of net profit. So financial accounting having higher higher opening stock, that means the here the value is, if you take the reference 47,000, right, 47,500 minus 52,500, the gap is exactly the 5,000, right? So the higher opening stock is with which accounting? Financial accounting. Financial accounting are having higher opening stock, mean their profits are low. Their profits are low. This is the here. You should receive an answer having a low profit, mean you must deduct here. Then higher opening stocks. Higher opening stocks in financial accounting. The value is 5,000. Then second one. So who's having the higher closing stock? So higher closing stock are with the as per the financial accounting again. So now see the opposite. We'll change it like this. So I'm erasing this and higher closing stock. Now see, this is high. In financial accounting, it's 143,500. This is high, mean you are receiving a low amount here. Higher the closing stock, lower the cost of sale, higher the gross profit. Now see, closing stock and the gross profit have a positive relationship, right? Higher the closing stock, lower the cost of sale. If you increase this figure, you are receiving lower cost of sale. Lower cost of sale mean higher gross profit. Higher gross profit mean higher net profit. Then the financial accounting has considered a higher closing stock. That means they are having a higher profit margin. How much the gap? 122,500 minus 143,500. The gap is 21. So the financial accounts are having higher closing stock. Financial accounts are having higher closing stock, mean their profit is high. So I must add here higher closing stock. Higher closing stocks in financial accounting. The gap is 21. The gap is 21. Right? So this is very important for you all. Again, I am telling you. So remember the relationship between opening stock and the profit. The other closing stock and the profit. Opening stock and the profit have a negative relationship. Closing stock and the profit have a positive relationship. If you need to increase the profit, basically what we will do, increase the closing stock. Then the cost of sale will come down. When the cost of sale come down, your gross profit increases. Gross profit increases mean your net profit will increases, right? This relationship you must remember. For the exam, this relationship is very important. You should remember opening stock and the profit have a negative relationship. Closing stock and the profit have a positive relationship, right? So here, as I said, again I'll tell you, higher opening stocks are with the financial accounting. Higher opening stock in the financial accounting mean their profit is low. To get a lower figure, I must deduct. Then higher closing stock in the financial accounting, again higher closing stock mean their profit is very high. So I have added here. It's done. Number one, adjustment done. Number two, director fees 50,000 has been charged only to financial accounting. Now see, an expense has been charged only to the financial accounting mean their profit is low, right? So because my moving path is cost to the financial accounting. My moving path is here, cost to the financial accounting. So when they are considering an expense for the financial accounting, only for the financial accounting, their profits are low. To get a lower figure, I must deduct. So director fees considered in financial accounting. Value is how much? 50,000. Third one, depreciation charge as per the cost accounting 245 and it was 300 as per financial accounting. Who have charged the higher depreciation? Financial accounting. Financial accounting has higher charge depreciation, mean their profit is low. To get their lower profit, we must deduct. How much the gap? 245 minus 300. The gap is 55. So higher depreciation charge in financial accounting. The gap is 55. Then the last, fixed deposit income 48 was considered only in financial. And income has been considered only in the financial accounting, mean their profit is high. To get a higher figure, I must plus FD interest. FD interest 48,000. Now I have done the question for you all. Now if you do it like correctly, So you must receive the answer 490,000. We'll see whether it's coming 450 plus 21 plus 480, 48 minus 5 minus 50 minus 55 is 409. Right, so this type of question, this is 2023 July AAT II question number 5A. This type of question I am expecting on this time, because the last time they haven't tested this type of question. In this case, the very important point is to understand the relationship between the stock and the profit. Right, I hope you will understood this clearly. Thank you very much. Done. Who's there?